Stop exactly what you are doing right now, especially if you are about to drop thousands of dollars on a brand new Nikon mirrorless system. We all thought the camera market was finally stabilizing after the massive, painful DSLR to mirrorless transition. We thought the worst was behind us. But the Asian financial supply chain just leaked an absolute bombshell that could completely destroy one of the most legendary brands in photography history. We are staring down the barrel of a massive, unprecedented 86 billion yen final deficit for Nikon. And right now, there are active, highly credible rumors that they might be forced to completely sell off their entire camera division just to survive. So what do? Do you hold on to your current Z-mount daily driver and pray for the best? Or do you start aggressively jumping ship to Sony or Canon before the resale market completely crashes and your gear becomes worthless? Let me break down exactly what the top financial insiders are leaking today, because this is a massive warning sign that no creator can afford to ignore. To actually understand the sheer scale of this panic, we have to look directly at the raw financial data. Financial reports analyzing Nikon's consolidated financial results for the fiscal year ending March 2026 show numbers that are genuinely terrifying. They have posted a massive, record-breaking final net loss of 86 billion yen. Let that specific number sink in for a second. We are not talking about a slight dip in quarterly revenue. We are not talking about missing a minor Wall Street projection. We are talking about a catastrophic 86 billion yen hole in their balance sheet. This terrifying financial reality instantly triggered a massive wave of panic across the tech, business, and photography sectors. It is the exact same type of aggressive financial bleeding that forced Olympus to completely sell off its legendary imaging division a few years ago, changing the micro four-thirds market forever. But here is where the rumors jump from bad to potentially industry-altering. Major global business outlets recently corroborated whispers circulating through the financial markets that a massive corporation called EssilorLuxottica is actively maneuvering for a potential buyout. Wait, really? A French-Italian eyewear company buying Nikon? Honestly, I will believe it when I see the ink dry on the contract. But the moment this specific speculation dropped in mid-May, the Japanese stock market went absolutely crazy. Nikon's stock price instantly spiked, hitting a daily high and surging over 8.6% in a matter of hours. This specific, aggressive market reaction proves that institutional investors and Wall Street traders are taking these buyout rumors incredibly seriously. This isn't just random forum gossip anymore. Billions of dollars are moving based on this news. Are you guys genuinely worried that your Z9 or Z8 is going to become unsupported legacy tech? Or do you think Nikon is just too big to fail? Let me know down in the comments right now, because the anxiety in the Z-mount community is absolutely palpable. Now, let's look at who this potential buyer actually is. EssilorLuxottica might sound completely random to a tech reviewer, but they are an absolute juggernaut in the global optical industry. They are the massive, trillion-dollar conglomerate behind household brands like Ray-Ban and Oakley. They deal heavily in advanced optical products, including prescription lenses and high-tech smart glasses. In fact, industry analysts have noted their aggressive expansion into wearable tech, which directly competes with the augmented reality ambitions of tech giants like Apple and Meta. What most people do not realize is that EssilorLuxottica and Nikon are not strangers at all. They actually have a deep, long-standing, existing 50-50 joint venture handling Nikon-branded eyewear. They are effectively already massive stakeholders and partners. In fact, EssilorLuxottica has been aggressively buying up open market shares to become Nikon's largest shareholder, locking in an 18.59% stake. So, a full acquisition rumor is not some hostile, random takeover from an outsider. It is an internal corporate absorption. But what does this actually mean for your expensive camera gear? Analysts often discuss how massive corporations handle consumer divisions when things get tough. Look at Sony. They ruthlessly killed their beloved Vaio laptop division the second it stopped being highly profitable. Olympus sold their entire camera business to an investment fund just to stop the financial bleeding. The harsh reality is that consumer camera divisions, despite having incredibly passionate fan bases, are often low-margin, highly volatile businesses compared to medical imaging or industrial lithography machines. However, a closer look at the actual paperwork offers a completely different perspective on the internal chaos at Nikon. The massive 86 billion yen deficit is actually not being driven primarily by the camera division. The real financial black hole right now seems to be their aggressive investments in 3D printing and advanced industrial digital manufacturing tech. Nikon had to take a massive, painful 90.6 billion yen impairment loss on its metal 3D printing business due to intense, aggressive competition from Chinese manufacturers who are undercutting them at every turn. Meanwhile, the actual digital camera division performed near expectations, stayed solid, and continued to bring in steady revenue. So there is a very real possibility that Nikon will try to aggressively restructure those failing industrial sectors while desperately clinging onto the camera business as a core legacy brand. They might just shrink their camera lineup, focusing only on premium, high-margin bodies like the Z8 and Z9, and completely abandon the entry-level APS-C market to cut costs. For creators who rely on Nikon as their daily driver, this is a massive, stressful test of loyalty. If you shoot on a Z6 III or a Z7 for your hybrid video work, the thought of losing future firmware updates, losing seamless integration with new editing codecs, and losing reliable repair support is absolutely terrifying. A brand needs to guarantee long-term stability to justify the massive Nikon tax on their premium S-line lenses. If they do end up selling the division, the new owners might just milk the legendary brand name for cheap consumer electronics, totally abandoning the professional market. My best opinion about this product ecosystem is that you should absolutely not panic or panic sell your gear right now. When you look past the scary, clickbait headlines, Nikon's imaging division is actually healthy, stable, and making some of the best products on the market today. The massive 86 billion yen loss was a one-time accounting write-down from their industrial 3D printing venture, not a sign that the Z-mount is dying. Furthermore, EssilorLuxottica is legally capped at a 20% non-controlling stake under Japan's strict foreign trade laws, meaning a full foreign buyout is highly unlikely to ever happen. Nikon's camera division is not going anywhere, and your expensive Z-mount lenses are completely safe. If you like the video, subscribe, share the video, and hit the bell icon.